Hey guys, this is Nishant from 25koptionschallenge.com, and this is the market outlook for the week of May 29th, 2022. Well, I made this funny graphic for you guys, but as you can see, I made a negative 80% club, and all these stocks are lined up going inside the club. This is reality. This is what has happened this year. This 5 month long sell off has been so brutal that even well established good companies have lost so much value. Like we're talking 50%, 60%, sometimes 80% um, loss in market cap. This week I decided to just dig into some of the stocks and come up with some interesting data for you guys. So let's start with this. This is really interesting data, guys. So S&P 500. This is the list of the longest losing streaks that the S&P 500 has experienced in recent history. So it starts from 1950. So in 1953, we had 7 weeks down. Then comes 1970, 8 weeks down. 1980, 7 weeks down. 2011, 8 weeks, and then we have 2022, and we are at around 7 weeks right now. Now, the reason why I compiled this data for you is this is really interesting. Look at what happened when markets sold off like this in the past. The following 1 month, 3 month, and 6 month returns were mostly positive, with the exception of 2011. But let's not focus on this, the 6 month area. I'm trying to show you guys this data so that you can plan your trading in the coming 1 to 3 month time frame. And notice that in all these years, markets have had really nice positive returns. So the nice green candle that we saw in the last week, if we can continue that momentum, then there's a really good chance of a very strong rally that we may experience. And so you should be prepared for it so you don't miss out the opportunities that will arise when we see that rally. Another interesting thing I compiled is I made a list of stocks which have lost 50% of their value of market cap and then 80% of their market cap. So obviously the number of stocks which have lost 50% or more of their value of their market cap is huge. So to keep that list under control, what I did was I just ran a scan on the stocks from our watch list which I trade from, and we have around 180 stocks in that list, and these are really high quality blue chip type companies. These are not your like penny stocks or stocks like Robinhood. They're trading less than $10 because those stocks are more likely to lose a lot of their market cap when these sell-offs happen. We are talking about really good companies, and from that 180 stocks, look at this huge list of the stocks that have given up 50% or more. And again, I'm saying 50% or more because there are many stocks in here which have lost way more than that. To example, DocuSign has lost, I think, more than 70% or maybe 75% of its value. So look at this list. And when you look at this list, if the market recovers from here, these are the stocks, because these are all really good, well established companies. These are the stocks that will generate a lot of trading opportunities. So you can use this list for scoping out new trade ideas as we recover from here. Then we have the stocks which have lost 80% or more of their market cap. I mean, this is like massive. 80% of the market cap is no joke, guys. I mean, look at this list. Affirm, Beyond, Beyond Meat, CVNA, Fiverr, NVAX, Roku. I mean, the list goes on. Look at the prices that these stocks are trading and where they were when they were at their 52-week high. So this is some interesting data. Use this data as you please. Next, let's talk about any macroeconomic events that are lined up for next week. And next week is pretty quiet. There is not much going on really. We have the usual slew of data, macroeconomic data that comes out every week, and jobless claims is always an interesting number on Thursday, and then you always have the Ukraine war situation. Um, but outside of that, there is not much going on. If the markets can continue going higher next week and follow through on the momentum that we saw last week, then we have a really good chance of seeing a nice recovery rally. And there are no big macroeconomic surprises to um, to change the market direction. That's really good news. Earnings next week. So the earning season is drying up, but we still have a few of the stocks from our watch list reporting earnings. We have Salesforce, MongoDB, RH, Lulu, CrowdStrike reporting earnings next week, and um, if the markets appear stable, then this will generate trading opportunities for us. So not much going on on the earnings front, but still a few stocks reporting. Let's take a look at VIX. So if you look at the 6-month chart for VIX, um, this is from starting from January. So after VIX spiked up, that's when the market started crashing, and then it has made 5 attempts so far to fall below that correction territory zone that I've highlighted, which is around 24 area. So attempt 1, 2, 3, 4, 5. All of these attempts have failed, and VIX has just spiked back up after this, and markets have continued to slide. This is the sixth attempt that the VIX is making to drop below correction territory. And if we are able to make that move and fall below 24, that's a really good sign. Now let's talk about QQQ. So QQQ, SPY, Dow Jones, they're all moving in sync. So I just picked QQQ this week. Um, First, let me show you the 3-year weekly chart for QQQ. This chart shows 3 years. And one thing I have highlighted in the past market outlook too is on every candle in this chart represents 1 week. And this is the massive sell off that we saw in the last 7 weeks. Week 1, 2, 3, 4, 5, 6, 7. 7 weeks of selling off. And then finally, we have put in a green candle here, which was last week. One interesting thing that I've been pointing out to you guys is look what happened during the COVID sell off in March 2000. The RSI went to oversold territory, and when it came back up, look what happened to the market. We had a massive rally that we saw after that. Now, we are exactly in the same situation right now. RSI is sold, is in oversold, and is coming out of oversold. And we have that weekly green candle. If you look at the DMI indicator, the DI plus is pointing down. So all these signs are pointing to a really nice rally if we can sustain this upward momentum. I'm not saying that we may experience this kind of a bull market that we saw in the last 2 years, but we are definitely overdue for a relief rally. Now let's zoom into the 6-month chart for QQQ, which is the Nasdaq 100 ETF. And what I see here is that the market has been stuck in this downward price channel since April 1st. This is April 1st. We have been constantly selling off. We have made one or two attempts to break out of this channel, but all attempts failed. And this is the first time where we are seeing some kind of follow through and momentum. And the descending price channel does seem like it's broken. And if you look at our mean reversion indicators, RSI is looking really strong. And the DMI indicator, if you look at the DI minus and DI plus, they're pointing towards each other and almost heading towards a DMI crossover. If you look up DMI crossover, it usually signals a big change in the market direction. So if you look at this on 3rd January, when the markets actually started selling off, we had a DMI crossover, but to the opposite side where DI minus crossed DI plus to the upside, and that's where the sell-off started. Then we had a DMI crossover here, and that corresponds to the really nice rally we saw from March 15th to April 1st. And then now we are seeing this third DMI crossover, and that could signal a really strong rally too. Something to keep in mind. Quick look at the 10-year treasury yields. As you know, 10-year treasury yields move opposite of growth and tech stocks. And after peaking at 31, it has been falling, which is good news. And there were some minor spikes here and there, but overall you can see the direction is going down, and this is good for growth and tech stocks. Some key takeaways from this today. One is there are no major market moving events next week to surprise the markets, which is really good news because that lays the foundation for a calm environment for the markets to continue moving up. Then TNX continues to slide, VIX continues to slide, and remember VIX below 24 will coincide with either a really strong relief rally or a bull market. Earning season is drying up, and there are some interesting earnings next week, which could generate some trading opportunities. Now the cheat sheet is still the same. We are still in a bear market scenario where Qs are below 317. Dow Jones is below 330, SPY for less than 415. We are still in the bear market scenario right now. The next stop for these markets is to get into this area, which is still a deep pullback danger zone, but that will signify that this upward momentum has some legs. And you can also consult the chart, QQQ chart that I have. I have drawn several resistance and support zones for you. So the first resistance is coming up at 310. Once that clears, if we can maintain this upward momentum, then the next stop would be 338. And finally we have a third resistance at 350, and then it's all clear. Once if we take out 350, then the next resistance is really at 380, after which we will be in a bull market again. But for now, let's just focus on if we can take out that 338 area by next week and see if this upward momentum has some legs. So that's it for this week, and hope next week we can continue this upward momentum that the markets have put in. And good luck to you all.